So reverse mortgages are something that most people have heard about, but don't really understand. There was a time when the product was terribly abused and created a bad reputation. But that was like 20, 25 years ago. And ever since, it's been a great tool that's underutilized in my professional opinion. And I was really excited to meet with Martha Shanks from Fairway Independent, who I know is a company very well, top-notch mortgage company, and she's a specialist in the reverse mortgages. And so I thought I'd get some time with her to share what she does, how they do business, and how it can help you with yours. So Martha, thank you for taking time with us today.
Thank you. Thank you for the invitation.
A little background, how long have you been in real estate?
So I became interested in it and joined it in 2005. That's when I left my prior field and moved into real estate.
And you're a reverse mortgage specialist. I know. So that means that unlike some people who try to do every kind of loan at Fairway, this is your product, and other agents probably refer you the business and you refer back. How long have you been with Fairway specifically as a reverse mortgage specialist?
So I've been at Fairway since early 2016. And about 4 years ago, I got introduced to reverse mortgage. One day down in Irvine, one of our directors was doing a one-day presentation, and I just walked out of there. Just my brain was like exploding, like, oh my gosh, this is amazing. Why are people over 62 even having a mortgage? I mean, that was the impact of that to me.
Right.
And so once I kind of got past that initial phase, then I just started to learn more about it. And obviously I did both for a few minutes, and then I changed over and just decided I want to focus on this 100%. Probably at least 3 years. I'm doing just reverse mortgage on my 4th year.
Now, Fairway is a national company. For those who don't know, one of the largest independent mortgage companies in the country, and very well known in the conventional mortgage space and government mortgage space. As a reverse mortgage specialist, how many states are you allowed to do business in today, or as a company, how many do you operate in?
Yeah, great question. So Fairway, the big Fairway, I call it, is in all 50 states. We've built contacts in all 50 states, also in reverse. So I have a wide group of people that I can talk to about, like I referred one to Texas the other day. I personally work in both California and Arizona. So I just closed one in Arizona a couple weeks ago. People left Highland Park, which people may be familiar with, and took their dollars actually and moved to Prescott, Arizona. And
nice.
We closed one there. Yep.
That's good for them.
Yeah.
Okay, so and I think, I don't know if your assessment's the same as mine. I've been around a little longer than you. When reverse mortgages came out years ago, they were kind of associated with a scandal, and it was taking advantage of seniors. It wasn't well defined. The products were all kind of individual and different, so it was hard to pin down. It seems like now it's kind of standardized the product, and there have been some protections built in for the consumers. So the next question I'd like to ask is, what is the most common misconception about reverse mortgages that you deal with?
So the most common is that the bank will take my home. And that's really the first thing, whether it's the actual client or maybe even their heirs. And it's just like a regular mortgage. It simply is a lien that's on the property. So once you're exiting the property, you just simply sell it, and it's just a payoff, just like you would do in a regular transaction. So you're still on title and you still own the property. Now, there are a couple other things that have come up. One is that we've done as far as protections is both the husband and wife or spouse and spouse need to be on the loan. I think early on, they allowed the older borrower to put him or herself on the loan.
Yeah.
Him or herself would pass away, and then maybe the wife would be left with no access to that loan because she hadn't been put on it. Right. That caused a lot of problems in the marketplace and bad press. Right. The other thing is that people were not able to make their property tax and insurance payments. We have inserted a financial assessment tool so that before you can get a reverse mortgage, you have to show that you can continue to make your payment on your taxes and your insurance, and actually have a bit of living expenses covered as well. So those two things, I think, did a tremendous amount to kind of cut away from foreclosures and things like that.
I can speak as an expert in probate real estate that the reverse mortgages are actually harder or less likely to be foreclosed on succeeding heirs than a regular mortgage. Now, when somebody passes, what's changed in the last few years is the Social Security Administration notifies banks and lenders right away, and they know right away somebody's passed. A
Yes.
regular lender will just know there's a change in ownership and move it towards. As long as you're making payments, they'll take your money. Once you tell them that they're gone, they're going to start foreclosure, and there's no stopping them. It seems like the standard reverse mortgages is at least 6 months, and then even then, it seems like they work with the families. If you're in process, like as a listing agent, I'll show them the listing. I give them my authority to discuss it. Show them that we're in probate. It seems like they're more willing to work with it. Is that just the nature? Is it a company by company thing, or are those program issues, or how would you describe the extra protection families get? I think in reverse.
So another key question is what happens when we leave the home or the last borrower passes away, right? And so what'll happen is you'll get a letter fairly quickly. To your point, everybody knows fairly quickly when there's a death. And so I always say to people, there's going to be a letter that shows up. It's going to be a little bit aggressive, but it's going to say, sorry for your loss. Let us know in the next 30 days what you plan to do. I mean, I'm sure it's changed a little bit, but that's essentially, let us know what your plans are. So it is important for the family to have an exit strategy, to know kind of what they're going to do. Now, once you get that and you make that decision, you do get 6 months to be able to go ahead and sell the property or refinance the property. You are given 2 90-day extensions, which are not difficult to get. I've really not heard anybody not get turned down for any of those. So you really can get up to a year. Now, what I will say is there's 2 types of products, and I don't know how much we want to go into this, but there's the FHA HECM product, which is kind of mostly 95% of the marketplace. And then we have the proprietary, which is the one that starts at 55 and goes to the value of the property, like a $4 to $5 million property, and we're able to grab more. We might want to just stick to the FHA one today. That has slightly different guidelines that we always want to make sure people are aware of. So
I think you're right, though. I didn't know that there's formally 2 extensions, but it seems like there's 2 extensions. I know the worst scenario is where there's a child living in the house and they just notice they have to make a payment and they're getting away with it, and they eat up that 6 months.
yes,
And then now we're in a pinch to get things going, and that's where I come in as a probate agent, and I can move quickly. If they play around with the probate, they don't get the right attorney, or they don't get the paperwork done and don't get approved, that can eat up 3-6 months pretty fast on those extensions. Whereas the right attorney, you get authority right away. Now you can list the property. And I also find the lenders are very willing to extend even further. If you're listed, you have your authority, you're in process.
yes.
They don't really want to foreclose, whereas traditional lenders are glad to foreclose because they make money on it. So, okay. So the biggest misconception is that they're going to lose the property. Where do you see the biggest benefit when customers say, wow, Martha, thank you so much for setting this up. This is why it really worked out best for us. What's the biggest benefit that you see for customers who get a reverse mortgage?
So where I would start right now is for those folks who don't have a lot of retirement assets and they're living off of maybe a small pension and a Social Security income, being able to eliminate their mortgage payment, right? So yesterday I ran one for a woman who's actually still working at 87. Hard to believe, but she's still working at 87. Has I think somewhere around $1,200 a month that she's paying out in her mortgage. And so felt compelled to keep working and wanted to work as a worker. But we looked into that, and I ran all the numbers, and she's not only saving herself $1,200 a month. So that's going to be somewhere around 15,000, but then she also, because of her age and because of the value of the property, has a line of credit that will grow for her. So the biggest benefit is, first of all, eliminate your mortgage payment. And then hopefully get some form of a line of credit that grows with time. If you have a free and clear house, the option is just put that line of credit on there and use it as needed, but watch it grow. So the biggest, benefit is that line of credit that can grow over time. As it grows organically, it's something that I constantly tell people, this isn't like your US bank HELOC. It's literally something that's been built for seniors, so it grows over time for them.
So there's 2 main scenarios that I see these products being used. One is a refinance, i.e. we have a mortgage or we don't have a big enough mortgage, we want some cash, but the payment scares us. And the other one is we want to buy a property and use the reverse mortgage for a purchase. So let's talk about refinance first. Like you mentioned, saving payments. one of the concerns is they have a mortgage now. If they get a reverse mortgage, the rate's going to be higher theoretically than many people's, but they have to make a payment. So how does that eat in their equity, and what are some of the concerns, and how can they work around that?
So what we focus on a lot is like the liquidity that's needed as you age. So we kind of focus on that aspect of it. Of course, there's going to be whatever it is today. I mean, we're looking at 7.5% to 8% right now, maybe a little lower, as far as the increase in the mortgage balance, but in the loan balance. But we're also seeing that same growth rate on the line of credit, right? So the thing that's important is that when you start, you have a loan balance and you have a line of credit. That loan balance is just going to be the cost in a free and clear home, and then you've got whatever you've got for that loan balance. Both will grow at the same amount. So while you might eat away at some of that equity, what your relative growth rate is on the other side is so much larger. So you're going to get more access as time goes on, and you're going to get something 7 to 8% right now. Rates do change; they go up and down. But you're going to get, a return that is going to be pretty good for you, and you will have a relatively small balance. Now, we have to also look at it like, let's say you're paying off a $198,000 mortgage. That's going to begin to accumulate interest immediately. But you also have to take a look at, well, what liquidity am I going to build? What cash flow am I going to gain? And then what liquidity am I going to build within my house that I can use as I age? So for a typical person, a couple people I've had kind of over the last week, that's exactly what we're building. We're replacing that mortgage so they no longer have to make that. That's quality of life cash flow. And then we have a line of credit that's just growing behind the scenes for them. And when they need it, they can use it. So that's kind of the two ways that I see the biggest benefit for this product.
I think years ago, I'm sorry, and I think years ago was a big concern about eating into the money left over for family members. But I think today there's so much assets in inheritances now, it's less of a concern. Also, a lot of people who don't have children who don't have to focus on leaving assets, but really enjoying them while they're alive and having the best quality of life that they can have right away. So to me, it just creates a lot more options than you would otherwise. So let's talk about the purchase side. Imagine somebody who's relocating, maybe their house here, they don't want to sell it, they want to rent it, or they have their money tied up for whatever reason, and they want to relocate to another state. What kind of loan to value can you get on a purchase using a reverse mortgage?
So that loan to value is going to be based on your age. Okay. So for a person that's going to be in their 60s, it's probably going to be below 40%. Okay. For somebody who is, heads into the 70s and 80s, we're starting to get into the 40% and even hit 50 in the 80s. That's kind of where we are today based on the interest rate and what we get for our principal limit. So as an example, I just closed one in Palm Desert, and it was a $495,000 purchase, and they probably put $250,000 in, and the rest of it was the mortgage. I mean, the rest of it is a reverse mortgage. So think about the fact that they'd had a $495,000 home. Actually, it was a mobile home, which we did. $450,000 mobile home on a golf course in Palm Desert, and they put $250,000 plus closing costs, I should say. And the rest of it is a reverse mortgage. They never have to make another payment. There is growth on there's obviously going to continue to be growth out there. And so they're looking at putting $250,000 plus closing costs on a property and never having to make a mortgage payment. So if you think through the options for that and what it means for them, it's just such a nice stress-free way to enter that phase of their life.
Yeah, and I'm a candidate for that in that I used to live in Florida. We moved here 30 years ago, and I've always thought I'd like to move back at some point, though we have kids and grandkids and such here.
Sure.
So I can't pry my wife away with a crowbar right now, but in my mind, financially, I've been planning to buy a house for cash in Florida and then keeping assets here, figuring out what to do with all that. And I realized, well, I don't have to put down, and the target price for the house keeps going up, of course. It was $500,000 a few years ago, and now it's $800,000 for a home maybe that we're looking at. But I don't have to pay for the whole thing cash. I could put down 40% even is still, a substantial savings. And so instead of saving $800,000, I can save maybe $500,000 and get the property and not have a monthly payment, which makes that, a much more viable option as a transaction. So
Yeah, just to clarify, so the 40% is what you get from the reverse mortgage. So you'd have to put closer to 60% down,
right.
just so that we're all clear. Yeah.
Right, so $800,000 purchase, I might put down 500 and get a 300,000 loan,
Yes.
but it's
Yeah.
$300,000 I don't have to put down. I can keep that in the bank and get income on that and keep it more comfortable and transitions and all that. So
Yeah.
it just it's not, again, for very elderly people, it's another way to get it even cheaper than that. But even for somebody, I'm not that old, but still it's 40%. It's less cash I have to come up with by 40%.
So that's a perfect example. The one in Prescott, they bought for $825. They put down about 500, 525 maybe, and then their mortgage is, the remaining portion. And they don't have, because they sold a home in Highland Park. We all know those are, quite a price, and so they're able to put that in the bank. They're able to put that additional 300 plus whatever else they got out of that property into the bank and have it grow with either somebody or in the savings and that kind of thing. And I'm pushing them to not pay off the reverse because they've got all these dollars that they can use as time goes on. So
yeah, I think that, and I guess I think for me that was exciting to think about extra money to have a better quality of life rather than have to have it all tied up in the house. So
yeah,
I think the key thing here is there's options, and to get with a professional to walk through your options and get a plan together that makes sense for you. Martha's one of those. Martha, I really appreciate being on today. Just to share your contact info, you have a nice contact screen on Fairway with your glowing smile there. And all your contact info. What's the best way to get in touch with you if somebody has some questions on what to do?
Right. So my cell phone is perfect. That's right there, and my email. So those are the two things I focus on, and I've got them right here, and I'm working all the time, or not all the time, but working quite a bit. So I respond to people fairly quickly because these are people who have needs, and so we're trying to get them moving as quickly as possible when they identify it. So anyway, it's a great product. I'm 100%. I absolutely love it.
Well, great. Look, I work with attorneys all the time. I tell people I work on real estate agent time, not on attorney time. So that just means we live quickly. I know you do too.
Yeah.
It was great seeing you at our event last month. Hope to see you again next month. Always great to talk to you, Martha. Thank you for your time today. And we look forward to working with you.
Great. Thank you so much for the opportunity to speak today.